All right. Good evening, everyone. Welcome to tonight's webinar. I'm your host and speaker, Brian, and I'm a multi-asset leader here at Phillip Capital. So before I start, let me just pull up a poll right here to see if you can hear me loud and clear. If you can't hear me, you can vote yes. And if you can't hear me, I assume you have to vote no, or you could leave like a questions tab at the bottom. You should be able to have something for you to input. But so far, I'm seeing a lot of you here. I could actually see people are voting yes. So I think most of you can hear me. If you can't hear me, then I guess you just have to comment down below, which I'll be able to see you. But all right, so most of you can hear me. I'm seeing the results. So I think we are good to go. So before I get into the core content, let me just kind of bring you through a quick introduction to Flip Capital, as well as the products and services that we provide, right? Just a real quick 10 minutes, and then we'll get into the core content. Yeah. All right, so this is just a disclaimer that this presentation has not been reviewed by the Securities Commissions Malaysia and is only for general educational purposes only. It is not any investment advice to buy or sell any products. Hence, PCSB and its speaker, we are not liable for any investment decision that you may make based on the content of the presentation. If you are looking to dabble into trading and investing, definitely do consult a licensed financial advisor because trading and investing is very, very risky. All right, so just a bit about Flip Capital is that we were incorporated on the 7th of October 1995, and we are a wholly owned subsidiary of Flip Capital Holdings and Darren Berhad. Formerly, some of you may have known us as Flip Futures because back then we only offered futures and CFDs, but for the past 2 years, we have also started to offer stocks. Hence, we decided on the rebrand of our company into Flip Capital. We are a trading participant of Bursa Malaysia derivatives and a participating organization of Bursa Malaysia Securities. But most importantly, we are also a holder of the Capital Markets Services license, which means we are legally allowed to offer you these products and services. So we have around 11 Flip Investor Centers nationwide, which are our branch offices, where our headquarters is located in Kuala Lumpur. So if you are nearby any of these branches and you want to drop by, you can definitely do so. We are open from 9 a.m. to 6 p.m. and we have dealers there to assist you during working hours. This is the track record for our Bursa Excellence Awards that we've won throughout the years. Just as of recent, we have won awards in the Best Overall Derivatives Training Participant, as well as the Best Retail Derivatives Training Participant. So this is just a kind of like something for us to showcase to you that we've offered just exceptional services and support to our clients. And I also like to take this chance to thank all of our clients for allowing us the chance to even win these awards in the first place, right? I'm sure we'll be continuing to deliver better services as time goes by. All right, so we have a wide global network where we are situated in around 15 different countries throughout the globe, ranging from Western countries like France, the US, the UK, all the way to Asian countries like Singapore, Japan, Hong Kong, and also, of course, here in Malaysia. And essentially, what that means is that if you are our client, we offer you global coverage, meaning we have access to products from the US exchanges like the CME Group. In Europe, we have Eurex and ICE. In Asia, we have GPX, Tocom, Hong Kong Exchange, Singapore Exchange, and also Bursa Malaysia. Meaning, if you want to trade any of the products listed in these exchanges, you can do so through us as the middleman. as the broker, which brings me to the next point where we think that we are your one-stop solution for your own trading because as I went through over just now, we offer a wide array of products, right? We offer futures such as index futures like the S&P 500, the KLCI, metal futures like gold, of course, to good old equities and stocks like local Malaysian shares and foreign US, Hong Kong, Singapore shares. And last but not least, we also offer contracts for difference, such as local Bursa share CFDs and also a wide array of US based CFDs. Hence, we are your broker of choice. We offer you 24-hour broking and execution support, advisory services from our experienced dealers in the format of latest market news updates and also assistance for our free online account opening process. So if you're interested, you can actually learn with Flip Capital, right? We offer you free one-to-one coaching sessions, free seminars and webinars just like this one, and also assistance through our free account online opening process. If you are interested in the free one-to-one coaching sessions, it will mainly be separated into two sessions, right? The first one is mainly going to be on product knowledge, where we bring you through an introduction to stocks, futures, and CFDs. And the second session will mainly be tailored to our charting system, where we'll bring you through our platform coaching session. Okay. So if you're interested in joining us in our upcoming seminars and webinars, completely free of charge, you can scan this QR code right here. You can it will bring you to a portal and website where you can register and see all the details of the upcoming events for this month and also next month in February. All right. If you missed this, no problem. It is still on our website, flip.com.my. You can visit that later on after the event. It's completely fine. Next up, we have the weekly market calls, where on the left you have the market views and updates every Monday at 11 a.m. by our analysts. And on the right, you have the live counter technical analysis, which is by Mr. Zain Ao, our in-house technical analyst, where both of them are held on a weekly basis. Once again, completely free of charge. So if you're interested in joining any of these events, definitely scan both of the QR codes right here and you can register for them. Once again, if you miss it, completely fine as well. You can visit our website at flip.com.my and you can register for that there. All right, moving on. If you are interested in opening any of the accounts, such as stocks, futures, or CFDs, you can do so through this one online account opening portal. This link will bring you to this online portal where you can open any of the accounts. So if that interests you in any way after the event, you can do so by screenshotting this page right here. But I'll also have a page later on in the slides for you to register in case you missed it. All right, moving on. Next up, let me bring you through our trading platforms. The first one is FlipNova, which is the platforms our clients use to trade futures. It is multi-platform support, which means it is both on the Apple App Store, Google Play Store, and is also on desktop as well. And the cool thing about this platform is that we actually are linked with TradingView, meaning not only is our in-house FlipNova platform using the TradingView charts, but you can also connect your FlipNova trading account to TradingView and trade through the platform itself. As of now, I think we're the only broker in Malaysia that offers you the services. So definitely take advantage of it while it's still here. Not saying that it won't be here forever, but definitely take advantage of this since you've seen this right now. All right, so next up we have Holmes Global NY 3.0, which is the platform our clients use to trade both local and foreign shares all in one platform. Once again, it is on multiple platforms such as the Apple App Store, Google Play Store, and it is also on desktops as well. So definitely give this a look. We have videos on our YouTube channel if you want to see how it looks like, or you can reach out to any of the dealers nearby you, and you can get access to seeing how the platform in itself looks like. All right, last but not least, we have Flip CFD Trader, which is the platform our clients use to trade CFDs. It has cool things like price alerts, a user-friendly interface, and a bunch of other cool stuff. So if you're interested, give this a go. Yeah. All right, next up, we have the favorite part, which is promotions. The first one is a really cool one, which is you are able to trade US stocks at as low as 0.02% or with a minimum fee of 1.99 USD. We offer you no platform fees as well for our in-house stock trading platform and also free US live market data. It runs from now until the end of March. So this is one of the lowest rates in Malaysia. So if you're interested to know more, you can scan this QR code right here, or once again, visit our website at philip.com.my. We have a landing page for you right there. This is a really cool promotion to get started because you save a lot of money from this low cost. So definitely get involved if you can. Next up is also a very cool platform. Actually, a really good promotion. It's called Flip's Bite of Luck, which is a giveaway promotion running from the 20th of January until the end of March, where it's actually just started. And all you have to do is pretty much just follow our social media pages to be entitled for the promotion. And the giveaway, essentially, we're giving away stuff like, iPads, iPhones, Apple Watch, and AirPods. You can scan the QR code for more entries. But essentially, if you want to increase your chances to win any of the prizes stated here, you can open a stocks account with us, which paired with the previous promotion is one of the best times to get involved in trading stocks right now with us. So definitely give these two promotions a go. And yeah, anything you want to ask, you can ask me later in the Q&A section, or you can reach out to me after the event, completely fine as well. All right, moving on. We have the Refer and Earn program for our marketing representatives, where if you share our US stock promotion with family and friends, you can get an extra 100 ringgit for every 10 activated accounts, plus your original commissions running from January until the end of March of this year. TNCs do apply, of course. If you're interested, definitely give this QR code scan a go to know more about this promotion. All right, so if you're interested in joining our Telegram channels where we offer you free updates and recaps on both stocks as well as futures and CFDs, you can scan this QR code. It will bring you to two separate channels right here, and you can join them for free, right? Regardless if you are a client or a non-client, you can join these channels for free, yeah? All right, so we've gotten the introduction out of the way. I won't spend too much time on my speaker profile. Basically, I've been trading for the past 5 years, and I mainly focus on the futures market. But for stocks, I focus more on the US side of things. So I think we can get straight into the content. I don't want to waste too much time. Finally, here we are at the core content. Let me just get a sip of water and then we'll get straight into the knowledge. All right. All right. So first off, I want to say that this picture pretty much sums up what a fundamental analysis is for me. Right. We have a bigger picture and a smaller frame. The bigger picture, you can see it's like a mountain range, right? It's kind of blurry, but you can still tell it's a mountain range. Meanwhile, the frame gives you a smaller picture, but it's more zoomed in, it's more specific, right? Big picture shows you what the overall thing looks like. Small picture shows you specific, clearer image. And that kind of translates over to the two main styles of analysis in terms of fundamentals, macro analysis and micro analysis. Macro essentially helps you set the overall context, while micro outlines and highlights to you the specific opportunities. In this case, the specific stocks you should be looking to invest in. Okay, so this is what the two main types kind of give you, and I'll explain it to you in the next slide. So macro analysis, it focuses on big picture economic factors that impact the entire market as a whole, not just the stock market, but the entire investing scene of a country or even the entire world in just one format, right? So it looks at things like economic growth, mainly measured by GDP, gross domestic product, also looks at things like inflation, interest rates, global market trends, and also government policies and geopolitical events. It's looking at a very wide image to see if all these factors are telling you that the market is a good place to invest in right now. That's macro, big picture, right? Simple. Next up, we have microanalysis, which focuses more on the specific company or the specific industry in itself. It's different from macro in a sense that it mainly focuses on analyzing things like financial statements of a company, to look at the company's earnings or management quality, and even the competitive position within the industry in itself. So these two are the two main types of fundamental analysis. Okay, so looking at the macro parts, which will focus first, we are going to be using and looking at multiple economic indicators to help us paint a picture if the overall economy is even in a good place to consider investing in. Because something people, they always ask me, they ask me for stock picks, they ask me, oh, what company is going to go up or down, and quite frankly, when they ask me this question, I always tell them, the markets may not even be in a good place to look for investing your money in right now, because it depends on multiple factors. If the economy in itself is not doing too good, it doesn't no well, it doesn't mean that any stock that you pick will do bad, but it also kind of means that if the economy is not in great shape, there is a high chance that whatever stock that you pick to invest in won't perform too well. And trading and investing really is just a game of probability. So we kind of want to make sure most of the odds are in our favor. And the first step is to look at macroeconomic analysis. All right. So here I'll give you a few ratios, but really there are a lot of ratios that you could use, or a lot of metrics that you could use to measure the strength of the economy. But the first one is GDP, right, which measures the total economic output of a country, where high GDP mainly indicates a strong economy, but a slow or negative GDP can signal a recession, which is bad news for stocks. Okay, that's the first thing. Second is inflation, which basically shows you how fast prices are rising. If inflation is too high, it's not a good sign. If inflation is low, it might slow down business activity, but generally speaking, low inflation is good for the stock market, right? So high GDP is good, low inflation is good. Okay. Next up, we have interest rates, which are the cost of borrowing money set by the central banks. High rates makes loans more expensive, lower rates make borrowing cheaper. So if an interest rate of a country is high, it's not a good news for stocks, because with high interest rates, things are a lot more expensive in a sense, and people would rather put their money in safer investments like fixed deposits, treasury bonds, treasury yields, and they won't be looking to put money into stocks, because stocks are generally seen as a more risky investment compared to your fixed deposit. So that money will flow from stocks back into these safer assets like treasury bonds or treasury yields. So low interest rates means good for stocks because things are a lot more affordable. People are willing to take the risk. All right. So these are three metrics. Next up, we have unemployment rate, basically just showcasing to you how many people are looking for work but can't find jobs. If the unemployment rate is high, generally it means that the economy is not doing too well. Can I draw something real quick? Let me try. So oh, wait, I can't draw. 1 second. Let me try something real quick. All right, so if unemployment is high, generally it is not a good news for stocks. Okay, so moving on. Let me erase this. All right. So next up is exchange rates, which is essentially just how strong your country's currency is. If a country's currency is weak, it means that foreign investors look at your country's investment as attractive, right? That's one thing to look at it. If the ringgit, for example, is weak, people from the US, from Australia, from the States, they might look at our country as an attractive investment spot because of just how cheap our stocks may be. So low exchange rates definitely mean that our stocks are looking a bit more attractive, which will um, attract people to invest in our local stocks. Last but not least is also government spending and taxes. There's no general rule of thumb here, but normally if taxes are low, it's a good thing overall for people, for the public. If government spending is high, it essentially just means that the government is pumping money into the economy, creating more jobs, creating more work, which in a sense lowers the unemployment rate, which that strengthens your economy in a sense. So I went over six metrics, right? We went over GDP, we went over employment rate and all those things. But essentially, you could pick any of these and look at it with a good or bad thing because the more metrics you take into account, the better, because what these metrics are even showcasing to you is that it's the economy in a risk on or a risk off scenario. Risk on meaning the people or the public, they are more keen to put their money into risky assets like stocks. Risk off means the economy isn't doing too well, it's a bit risky, inflation is high. Let me put my money into something safer like gold, right? Like like fixed, maybe not gold. Gold is not exactly a safe asset, but more so things like fixed deposits, stuff like that. So they want to be cash heavy is what you would see in a risk off scenario. So when you're investing, always remember, right, that that money flows from industry to industry, from asset to asset. It moves from gold to stocks, from stocks to cash, from cash back to stocks. It's moving around. So if you can gauge the economy being in a risk on or risk off scenario, you can pretty much gauge if this is even a good time to be looking into stocks in the first place, which can save you a lot of time because people worry too much about which stocks they should buy, but they're not even looking at the markets if this is even a good time to get involved in the markets, right? So looking at these metrics, it gives you that image. So right here, I just broke down to you the theory behind it. Now let's look at um, the actual the actual ways to break things down. So right here, I'm showing you an example of US data releases, but you can find the exact same things in our local DOSM as well, which is the Department of Statistics Stats Malaysia. So the first thing is non-farm payroll, which basically just showcases to you the unemployment rate in the US. The second is a consumer price index, or known as CPI, which measures inflation. Last but not least, we have the federal funds rate, which is essentially interest rates. Okay, so the first one is NFP. In Malaysia, it's called the Labor Force Survey. CPI is the same as it is in Malaysia. For the third one, the federal funds rate, in Malaysia, it is called the overnight policy rate, or OPR. So you can get this data online. It's easy to find, but in this webinar, I will be focusing more on the US side of things. But the theory is the same. Um, if NFP is, for example, good, then it affects the same way in Malaysia as it does in the US. So it's just kind of like a bait and switch essentially. All right, so moving on. Here we have a website known as forexfactory.com. There are tons of other websites you could use as well. Some people use Bloomberg, some people use investing.com. I just like to use Forex Factory because I've always used it since I've been trading. So I just think I stuck with it. But I also think it's great because it is a website that showcases to you all of these statistics and data in a very structured and clean manner. All right. So it's a website that's free to use. So if you're interested, you can just go onto forexfactory.com and get all the data there. But let me run you through what the page actually looks like. So here on the top, you have the date right here for that time period. You can choose whichever time period you want to. On the left, you have the actual date in itself. And on that date, you can see we have different news releases. Red, red basically just means high impact news releases. For example, on Monday, December 16th of last year at 10:45 p.m. Malaysia time, we have high impact news for the US dollar, which comes in the form of flash services PMI. Right here, I highlighted a high impact news, which is on Thursday, December 19, 3 a.m., the federal funds rate, right, which is what we just went through just now. If you go to the right hand side of the corner right here, you have the forecast, which is the forecasted rate by industry players and just the overall opinion on the markets. It also highlights you the previous um, data release, which was 4.75%. So this is the Fed funds rate, which is the interest rates. So it showcases to you a bunch of important statistics and data that you would need to kind of do your macro analysis. So right here, we also have final GDP with the same things, but this is just a run through of the overall layout. But this is not just it. The cool thing about this platform is if you click on the mini folder right here, if you click on it, what it does is it expands the news release. It tells you more information, right? So here we have the usual effects. So if the actual is greater than forecast figure, it means it's good for the US dollar. And, it also tells you how many times this news release happens per year. It also tells you why you should care about this specific news release, but also it tells you the history of the previous news releases as of recent. So in just a really quick glance, it showcases to you all the important information that you would need to conduct your macro analysis. Okay, all in just one page. You can see everything short form, not too long, not too windy and hard to understand. No, quick, concise, and simple to navigate. Okay, so this is an example of the platform that I use to kind of get my data releases, forexfactory.com. So next, let's actually break down the big three news releases, which is NFP, CPI, and FOMC. So first off, non-farm payroll. Once again, it measures the unemployment rate of the US, right? So right here, we have the last NFP. Well, actually, this is the second last NFP. The previous one was in January, but this is the same example. We have NFP on the first week of every month on Friday. So this is Friday, the December 6th. We had NFP. And you could actually see that the forecast for NFP was 218,000 jobs created, but it was actually came out to be 227,000 jobs created. So employment increased, which is what? Which is good for the economy because more jobs created, more jobs, more work, and it means that it's good for the US dollar. Right? So if the economy is good, it means people are making money, they're happy, they have more money to spend on investing in risky assets like stocks. So that's one thing, but remember there are many other data because if you look at the unemployment rate just beneath it, it actually showcases to you that unemployment rate increased by 0.1%, which is bad for the economy, bad for the US dollar, right? So with NFP, we can conclude that we have one good metric, one bad metric, so it's a mixed signal, all right? So it's mixed. Now let's look at CPI for inflation. Right here, remember, if inflation is low, things are cheaper, which makes people have more money to put into stocks. Okay, so inflation has to be low for it to be good. And in this example, you can see here that CPI stands for inflation. CPI increased year on year, right here, which means inflation is high. Generally, it's bad for the economy, which is bad for the US dollar. So here we can have a clear sign that CPI is increasing, inflation is increasing. It's a bad signal. Okay, so recap, NFP mixed, CPI bad. Let's look at the next and the last metric, which is the federal funds rate or FOMC. Okay, so here we have FOMC on the 19th of December on Thursday at 3 a.m. You can see that the forecast is actually the same as the actual news data release. So you can see that compared to the previous interest rate decreased, which is bad for the US dollar, but good for the stock market. Okay, because interest rate decreased, your loans cost a lot less. People don't get more money by putting into fixed deposits. They are willing to put their money more into stocks for the high risk, high reward type stuff. So it's good for the stock market. So just to recap everything, non-farm payroll was mixed. CPI was bad signal for the economy. Federal funds rate was good, but you have one mixed, one bad, one good, so you have an overall picture of mixed signals. All right, so most times than not, you will realize that doing macro analysis, you will come up to a mixed signal, which is unfortunate. But unfortunately, that's just how things are. Most times, the more metrics you add, the more mixed things seem to be. But of course, this is your. I think should be the first step that everyone goes to when they look into investing or trading. Look at the overall economy and then decide if it's a good time to even consider looking at stocks in the first place because stock picking is very time costly and you might find yourself wasting too much time looking into stocks when the economy is not very good to begin with. All right, so that pretty much concludes the first part of our session, which is the macro aspect of things. I will take a sip of water while I let all of you collect your thoughts real quick. If you have any questions, once again, we do have a Q&A section at the end. So you could leave your questions down. I will answer them at the end of the session. All right. All right. Now, coming into the next section, which is micro fundamental analysis. It mainly focuses on a company's or an industry's financial health, management, and of course, its overall business structure to determine if it has a high intrinsic value or not. Meaning, is it worth it to invest in the company using numbers, right? So, for this part of FA, it's crucial for us to go through things called financial statements. All right. So these statements essentially showcases to us a few metrics. The first one being earnings and signs of profitability, meaning how much money is the company making. Second, it also reveals to us the financial health of a company, things like how many assets the company has, how many liabilities, what's the equity, and this showcases to you how stable a company actually is. Last but not least, we also have cash flow, which showcases to you how much money is moving in and out of the company, and this helps you to see if the company can actually fund its business operations in the long term. All right, so three metrics. It's mainly separated into three different financial statements. The first one for earnings is referring to the income statement. The second one for financial health refers to the balance sheet. And lastly, cash flow refers to the cash flow statement. So in this session, I'll go through each one by one, and I'll kind of tell you what all these statements have in mind for you when you're looking at them. So the first one is the income statement, which showcases to you the profitability of a company over a period of time. Now, there are many, different ratios and many different ways to calculate or look at the income statement, but essentially, the income statement has a revenue, and you take that revenue, which is the income, we minus the cost of the goods sold, and then we minus the operating expenses as well as the interest expenses, a bunch of expenses for us to minus off, and then we get a final profit. Okay, so this is the overall outlook and how the structure of the income statement normally looks like. All right, so here we have an example of the income statement for the company C Limited. And for those that don't know, C Limited owns my favorite platform, Shopee. So this is the financial statement for the year 2023. Okay, here I've highlighted that the gross profit right here is the metric. As I move my cursor towards the right, you can see that we have multiple figures divided by the year. But for now, we will focus on the year 2023. Okay, and essentially, gross profit right here, it evaluates how much profit there is after deducting the cost of the goods sold, which is just right above it right here. Okay, so this is the final amount, and it's come up to $5.8 million. Okay, you can source this from their annual report. I won't go through how to look for the annual report, but just pretty much search up C Limited annual report for a year and you get them. So right here for gross profit, there is a metric known as gross profit margin, which is essentially just taking the figure for gross profit and you divide it by the total revenue. And then you get this percentage, which essentially just means that the higher the gross profit margin, the more profitable a company should be. That's a general term. Before I move forward, I do want to shout out that the fact that ratios tell you a part of the picture, but not the entire picture. It's something you really have to look into, but it's not the only thing you should look into, right? But I think I'll leave that for a different session. For now, we'll focus on the financial statements. Okay. So next up, we have another page of the income statement. Right here, we'll focus on the net income, right, for the year 2023, which comes down to around 162,000 US dollars, right, which it basically evaluates how much profit is left after deducting business expenses. Once again, you can get the formula right here. Net profit margin equals net profit divided by revenue. And the higher the net profit margin, once again, the more profitable a company should be. Okay, so we here also have another metric known as earnings per share. Most companies have this written down, so there's no need to go through the formula, but essentially earnings per share showcases to you how much money a company makes for each share of stock. So higher the EPS, the better, right? Especially as an investor, you are going to be wanting to look at these stocks with the highest EPS as possible. Okay, that's a general rule of thumb. So here we have the EPS for C Limited at around 0.25 cents per share. Okay, so those are three metrics for Shopee. Now let's compare it to another company that we are all pretty familiar with called Lazada because they are in the same industry. Okay, let's compare them to see how they perform. So here we have the the income statement for Alibaba, which owns Lazada. Once again, revenue right here for the year 2023 in US dollars is right here. We take revenue minus the cost of revenue, and we come down to a figure of 46,000, you know, in millions essentially. Most of these statements they look the same. The format is pretty much universal, right? You have the metrics on the left, and then the numbers, the figures divided by the years, right? So it's segmented correctly. Once you can kind of tell one statement, you can kind of tell the other statements apart. So it's pretty much the same thing. So this is gross profit. If we take the formula, which is gross profit margin, we take the uh, gross profit divided by the revenue, we get a gross profit margin of 36.72%. And remember, the higher, the better. Okay, keep that in mind. These ratios and formulas you can all source online on your own time. They are very easy to find. In fact, most companies they pretty much have these ratios for free for public on their own website. So you can find these very easily. Okay, so that's the first metric, which is gross profit margin. Let's move on to the next metric, which is net profit. Right here, you can see this is the total comprehensive income, net profit of 13,000 US dollars. Okay, and take net profit margin. You take the net profit divided by revenue, you get a metric of 11%. I won't go through these figures one by one. I'll kind of just showcase to you the one example, and then we'll kind of speed run through the rest because it's all just the same formulas you can get online, right? So net profit margin of 11%. Next up, we have earnings per share, which is our last metric for the income statement. Net profit divided by number of outstanding shares is the actual formula. But on the annual statement, you can see that it's actually $0.5 per share. So here you have the earnings per share right here without even needing to input any formula. You can get it from the annual statement in itself. And next, we are going to compare the two to see which one wins. So left you have on the left you have Shopee. On the right you have Alibaba. Gross profit margin, which one's higher? Can anyone give a shout out in the in the chat box? Whichever one is higher, you can kind of type down between Shopee and Lazada. With Shopee, we have 44.67%. With Lazada, we have 36.72%. So does anyone have any idea which one's higher? Any guesses, or you could just see which one's higher. You can comment it down. All right, I'm seeing Shopee, right? So yes, Shopee has a higher percentage compared to Lazada, so it's the obvious winner here. What about net profit margin, right? Shopee has 1.25% and Lazada has 11%. Obviously, winner by a long mile is Lazada. And next we have earnings per share. Whichever is higher is a winner. So right here we have Lazada coming in as the winner uh, at 50 cents per share. All right, so the here the winner is Lazada by winning two metrics, but that's just for the income statement. Remember, there are three main statements, right? Income statement, balance sheet, and cash flow. So this is the first statement. Let's go on to the next one, which is balance sheet, which showcases to you the assets and liabilities of a company, right? So assets, for those that don't know, is essentially things that bring in money for the company. and liabilities are things that the company has to pay back. Maybe a loan, maybe some debts, but these are the kind of like the general difference between the two. So with a balance sheet, this is the very simple explanation. You have assets, you deduct that, you minus or deduct your liability, and then you get your equity, which is what the owners truly own. Owners being directors, shareholders, yada yada, you get the point. This is what the main format of the balance sheet comes down to. Okay, so right here we have once again an example of a balance sheet from Shopee, right? Right here we have highlighted the cash and cash equivalent of C Limited, which just showcases to you how much cash a company actually has. If the cash is actually higher than bank borrowings, it means the company is what we call a net cash company, which is in most cases it's a good sign. If cash is less than bank borrowings, it means the company is a net debt company, right? And I know I kind of did highlight these things in green and red to showcase to you if it's net cash, it's a better sign, but that's not always the case, right? For example, startup companies are mostly net debt because they are, starting from ground up. They have a lot of money spent on R&D, on marketing since they are new to the industry. They are going to mainly be net debt companies. But does that mean that a startup or at least a new company is bad? No, it just means that because of the structure of the company, it has to rely more on debt to fund their business operations. So, like I said, these ratios tell you a part of the picture, but not the entire picture. You kind of have to dig into things like, oh, is a company a blue chip established firm? Is it a new company? Is it an old company? Things like that to kind of realize if these ratios tell you a good story or not. Okay, so that is an example of a net cash and net debt company. Next up, we have the total assets right here of C Limited at around 18 million US dollars. Okay, that's the first page of the balance sheet. Next one, we have the second page, which is the page for the liabilities. Here you can see the borrowings, right? Which is, like I said, a liability. Sorry, I went past that. So borrowings are liabilities for the company because they borrowed money and then they have to pay it back. So here you can see the borrowings, and on the next page you can see the total liabilities at the bottom right here for 2023. It comes down to around $12 million, and with the assets, with assets and liabilities, you can now calculate something called debt to equity ratio, which mainly just showcases to you how hard of a time the company will have if they have a high debt to equity ratio, right? So high debt to equity ratio, bad, generally speaking, of course. Okay. Next up, we have total shareholders equity, which is basically the net worth of the company. You can get this by getting assets and you deduct your liabilities, or most cases you can just find it on the statement in itself. Okay, it comes down to around 6.6 million US dollars. All right, so we compare that to Alibaba right here. Total cash, Alibaba has around 28,000 USD in millions, and borrowings, it has around 1,000 USD in millions. Okay, for the balance sheet, you have the equity at around 144K USD in millions, and you can get the debt to equity ratio at around 0.75%. This is debt, this is equity. You divide the two, you get a number, and that is your debt to equity ratio. Okay, so right here, once again, we did compare the income statement last time. Let's compare the balance sheet. Once again, on your left, Shopee, on your right, Lazada. So which net debt, meaning are they a net debt or net cash company? In this example, we will just say whichever has the most debt is the worst one out of the two. So here we can obviously see that Alibaba has more debt, which means that Shopee is the winner. Moving to the second metric, we have net cash, which is the more net cash, the better. So obviously, Alibaba right here has more cash, which makes it the winner. And last but not least, debt to equity ratio. Remember, if a company is in high debt, generally a bad thing, but may not always be the case. So the higher DE ratio, the worse, right? So obviously, Shopee is at 4.24%. And Lazada is at 0.75%, which makes it a lot worse. Sorry, a lot better, right? So winner in this case is Lazada. All right. All right, so moving on, we have our last statement, which is the cash flow statement, which shows you the cash inflow and outflow of a company, right? Normally, this is what it looks like. Operating cash flow, you add that with investing cash flow, with your financing cash flow, and then you get a net increase slash decrease in cash. So operating cash flow meaning the money you have spent or gained from your main business activities. Investing is your money spent or generated from investments, and the financing cash flow is the money your company raised or repaid during the year. And there is something called free cash flow, where you're basically getting operating cash flow deducting your investing cash flow, and you get that free cash flow metric. But one thing I have to point out is that high cash flow does not equal high profits. Okay, profits and cash flow are different in sense that profits you is basically the money that you made from your company, and cash flow essentially just means money that has entered your company um, for that financial year. It's not profits because you haven't did, but you because you haven't seen if it's from your business or if it's from your investments or is it from your finances. It's not equal to profits. All right. All right, moving on. So this is the first page of the cash flow statement. We'll be looking at here. We have net cash gained or lost in operating activities, and a positive figure for business activities basically just means better or positive cash inflow, and negative is obviously bad. It meant that you lost money in your business activities, or at least you spent more money than you actually got in for a certain year. Okay, next up, we have the net cash used in investing activities, which is essentially money you used in the purchase of plant, property, and equipment, or things you've used in research and development. So once again, some people or some companies, they may have a lot of money spent in investing activities because they want to push out great products. They put in a ton of money into their research and development. It's not a bad thing, once again, but it depends on if the company is blue chip, once again, or if it's a startup or not. Okay, blue chips, they normally spend a ton in R&D to get more of an edge against their competitors. But once again, I digress. All right, so next up we have net cash from your financing activities, which is the money the company used to pay out your dividends or the money the company used to repay bank borrowings. All right, last but not least, we have cash, which is leftover cash or free cash flow. A positive figure means that the company has a positive cash inflow, while negative just means it has a negative cash outflow. Once again, may not be good or bad. It just depends on which stage the company is in. If it's a startup company or a new company, you should definitely expect a negative figure because most companies or businesses, they don't make money or they don't go break even at least 3 to 4 years into operations, of course, depending on the industry in itself. All right, so let's compare this to the one from Alibaba right here. Cash flow statement, you can see that net cash is around 29 K million from operating activities, right? Right here, we have the free cash flow, which is standing at around 33K million US dollars. Okay, so comparing the two, once again, let's compare Shopee and Lazada. Which one is higher in its cash from operating activities? Winner is Lazada. It made more money in terms of cash amount from its business operating procedures. Lastly, we also have the free cash flow. So whichever company has a higher free cash flow wins, and the obvious winner here is Alibaba with 33K million US dollars in free cash flow. All right. So once again, let's recap earnings and profitability. We see it from the income statement, the financial health, we see it from the balance sheet, and the cash flow, we see it from the cash flow statement, just as an overall recap. It may actually seem that Lazada outperformed Shopee in many different categories, right? It seems like a home run for Alibaba, but this is because both Shopee and Lazada, they are companies of different origins and size. Okay, C Limited is from Singapore or Alibaba is from China, right? And their sizes are completely different, which is why when you're comparing companies and pitting them against one another, you should always compare companies with similar sizes, right? Because as of last year in December, Alibaba had a market cap of 199 billion US dollars, while Shopee was almost a quarter of that at only 66 billion US dollars. So the size difference is really huge. Okay, you may not need to compare companies from the same country, but you definitely have to compare them with the same size because it wouldn't make sense for you to compare a small burger shop and you compare that to McDonald's, for example. It doesn't make sense. It's a different size, expenses are different, profits are different because they are in different stages of the business cycle. Okay, so wow, we went through a lot. Okay, we went through so much content. I understand if it was very difficult to sit through all of that. I understand how you feel. It sounds like a huge hassle. You like literally like there's so many things, right? It's like balance sheet, there's numbers, there's figures, there's ratios, there's macro analysis, there's micro. It's like so many things, right? It's such a hassle. And you're right, it is a hassle. It's crazy how much like how many things you have to go through to just pick a stock, right? But as always in the game of trading or investing, what's worth it doesn't come easy. Okay, but there are simpler ways to break down these companies and to break down the economy using tools like Morningstar. Now, I'm not advertising Morningstar. It is something that a lot of people use, including research analysts that print out reports for companies and stock picks. Morningstar or apps like Morningstar, they save you a bunch of time. Okay, so Morningstar is essentially a company that provides independent research and data on investments such as stocks. So they offer you things like detailed reports, ratings, and analysis. They compile all of this data into an easy to understand format all in one page. So you don't have to go to every single stocks or every single company's annual statements and look at the data one by one. You kind of get something in this format right here. You can get the current pricing, stuff like that. And on the right here, you have the key statistics, like price to earnings ratio, price to sales, total yield. And you can see just a bunch of different metrics that you can get just from something like Morningstar, right? Once again, we are not affiliated with this company at all. I'm just showcasing to you an example of how you could save time when you're doing your stocks picking or your FA essentially. Because, like I said, I know many of you, I assume, work a full-time job or even have school, you have uni, or maybe you have kids to take care of, and no one really has that amount of time to just spend on looking at figures from financial statements. You are insane to think that you have so much time and energy after work to just sit there in front of your PC and looking at all those numbers. You are going to lose your mind. Okay, so using something like Morningstar saves you a bunch of time. It saves you a bunch of mental capacity as well. So you have to keep in mind though that things like Morningstar, they're just there to help you speed up the process of doing your stocks analysis. But in the end, you are still required to do your own research since the person that decides to invest in a stock is still up to you. Assuming you don't put your money into something like a managed fund, if you're doing stock picking, you are the one making the final decision. Okay, so always approach things with a cautious mindset and do your own due diligence. Right? So sure, Brian. Okay, so you have Morningstar, you have all of these tools. But what if that still seems like too much work? I'm just so busy. I just don't have time or energy to do all those things, right? I come home from work 9 to 6. I get home at 8, 7 maybe, take care of my kids, take care of my pets, and I'm too busy. What if that's just still too much work? All right. Well, if you're really too busy, then I would just suggest you use a DCA strategy, which is dollar cost averaging strategy on major indexes in the US like the S&P 500, the Dow Jones, and Nasdaq. And basically what DCA means is you're just putting money at good price points slowly. Like maybe you have 1,000 ringgit to put into the S&P 500. Every month you put in 50 ringgit, 50 ringgit, 50 ringgit, stuff like that. Or you just kind of take a part of your salary and you put it into an index like the S&P 500 because here we have a chart of the S&P 500 on the monthly chart on TradingView. You can see that since its inception, it's just been going up like crazy. This is the S&P 500. This is Nasdaq. It's been going up in a straight line, obviously bullish since its inception. We have Dow Jones right here as well, and we have the Russell as well. We do um, offer you the chance to also invest in these indexes at Flip as well. So if you're too busy with everything that we just went through, completely understandable. You could also just use a DCA strategy on any of the indexes here. Okay, you can clearly see that over time, over a long period of time, it just makes you profit, assuming you don't go all in at once. Okay, by using DCA strategies, you kind of reduce the risk of you trying to time the market, and you don't really care about short-term fluctuations at all because at the end of the day, in 30 years time, the S&P will have still gone up anyway. So I don't have to worry too much about where I get in from compared to stocks picking, for example. Okay, so wow, that was a really long webinar. I do apologize for parts that I may have not delivered too cleanly, but I'm glad we all made it through to the end. We have come to the end of the presentation. This is the time where I open the floor to any questions or concerns or any inquiries, and you can kind of let me know what you guys think or any questions you have. You can let me know right now. Okay, I do have a question right here. Someone wants me to navigate to Forex Factory. I think I could do that. One second. I think I'll just showcase to you just a quick look at what it actually looks like. Let me change my screen real quick. Okay, I think you guys can still see my screen right here. So this is Forex Factory. What it looks like is you can change the dates and times on the top right here. It's really not that hard to use. You have all these news releases right here for this month. Oh, sorry, for this week. And yeah, these are all in USD, Euro, Great Britain pound. So all of the news releases you can get right here. You click on the folders like I went went through just now. You can see all the implications of these news release in just one click, which is why I love this platform. I think it's incredible. I think it's great to use, easy to use, simple, gives you really quick explanations as to why you should care about these news release, and you can also segregate that using high impact, medium impact, low impact, by different currencies, by different event types. You can use all of that right here. Okay. So that's just a quick run through of Forex Factory. Let me reshare my screen real quick. Can I short stocks on your platform? Shorting the stocks on the platform is no problem. It just depends on if the stock is what we call a RSS stock, which means it is a stock that is regulated for short selling. I don't think there are many shares in Malaysia that is open for shorting stocks, but in itself, there's no issue with shorting stocks on our platform. It just depends on if the stock itself can be shorted, right? Because you aren't trading a CFD, you are trading the stocks in itself, and many stocks don't allow you to kind of short them. Okay. Can we get the presented slide? So, you could refer to the recording which we posted tomorrow. But of course, you could write in an email to my company, and I will send you the slide in PDF if you need it be. The recording will be posted on our YouTube channel, Flip Capital Sendirian Berhad. You could also find the link on our website at the bottom. So yeah, completely easy to find. All right. Since I don't see any other questions coming in, I think I'll just call it here. And once again, if you are interested in reaching out to me and you want to open an account with us, stocks, futures, or CFDs, you can do so through this one account opening portal. If you want, you could open an account with the Kuching branch where you get access to me and my colleagues, and we'll assist you on WhatsApp as well as on email if you need any help from us in guiding you to trading or investing. You can do so by opening an account with us because once you become a client, basically you are now our top priority list. Any questions you ask will be answered in a timely manner. Okay. So once again, if you are interested to contact us, here are our social media platforms, right? We have we have access or platforms or pages on any platform like Facebook, YouTube, Telegram, LinkedIn. We're also on Instagram, and this is our official website at flip.com.my. Once again, if you're interested, we also do give constant free information on our Telegram channels. So do scan these two QR codes if you're interested to join any of these channels. But most importantly, if you have any other questions that you have after the event, you can send in an email to pckc@flipcapital.com.my, and I will reply to that email once I get back to work tomorrow. Or if you are in Kuching, you could also drop by our office. The address is right here. We are open from 9 a.m. to 6 p.m. Every day, every weekday, of course. Yeah. So yeah, any questions you want to ask after the event, just write in to us or drop us a call. We'll get to your inquiry very shortly. But with that, thank you all for coming. We have come to the end of tonight's webinar. I hope you gained some knowledge in helping you navigate the markets. But most importantly, just don't over risk your capital. I just need you to stay alive in the markets long enough for you to be able to see profits. Okay, take it slow, take it easy, and manage your risk. Okay, yep. All right. Thank you all for coming. I'll see you all in the next one. Peace.